I just started doing saunas yesterday, and I have to say, it makes me feel really good. I don't know how to explain it. It's like, I don't know. It just makes me feel good. And now I'm ready to attack the day. All right, we got a pretty big day today. December trade recaps, recording this for the students. And I know I am slacking on this. This is really my bad, but I'm gonna fix that. I'm gonna record December, January, February, all this week, all right? We're gonna kill this. And then we have our deep forecast session, which is just me preparing for the markets, essentially, right? That's what a deep forecast means. And the DMI is essentially me recording the best opportunities we have today for the community. And then we got to work out later, and obviously the vlog today. For those of you who know me, you know I like to start my days with Symbiotica. Just gonna begin with Golden Mine first, and then we're gonna do magnesium later on in the day. The reason being is that I like to drink coffee, right? The problem with coffee is that it's a diuretic, so you start to pee a lot, and all your minerals actually go out when you pee excessively, which sometimes happens when you drink coffee. And drinking your magnesium after that episode of peeing is just good because it replenishes all your minerals that you need. Technically not all of them, this is mainly magnesium, but yeah, it's good for your brain. Symbiotica, man, I'm just a big fanboy of this brand. The Golden Mine is just a lion's mane mushroom, but it's really good. After you take it for about a week, you start to feel the effects. You just become a lot more focused, a lot more calm, and I don't really feel stressed no more, you know? For example, if I'm in a losing streak, if I'm losing trades, I just find myself a little bit more calm. Like, I know exactly what to do next. I'm not panicking, just on the ball. So we're gonna start off this vlog by talking about a trade that I took on CAD yen earlier this month. The reason why I wanna talk about this is because it does break a lot of the traditional rules that you will hear from baby pips, all these free resources or whatnot, but I really want to explain to you how you should break rules in the market when the opportunity presents itself, right? Okay, so let's begin here on CAD yen. This is the daily chart. What can we see on the daily chart here on CAD yen? What we have here is a very clear higher time frame downtrend. CAD yen is breaking down this key support level very impulsively. That's a good thing. That shows that we have a very strong downtrend in this market that we want to join. Now, what is the rule that I broke here? The rule that I broke here is that price is approaching another key support level on the daily chart. Usually, you hear that you shouldn't be shorting into a support level. Instead, you should be waiting for price to complete and then be looking for the upside reversals. As a blanket statement, that might be true, but being able to trade well in the markets is knowing when you should break these traditional rules. So once we get into the 4-hour chart, this is how you do just that. In my strategy, we are looking for deliberate price action. What does that mean, right? It means when price makes a structure that is not an accident, because it's very difficult to make structures like this. And in my strategy, what we see here is a continuation structure. This right here is a continuation structure that we can refine onto the 1-hour chart, which is my entry time frame. So once we get to the 1-hour chart here, when I see price making such a beautiful continuation structure, that's the market trying to tell me that, hey, even though generally you don't want to be shorting right into a key support level on the higher time frames, this is a very special time. This is a unique time that doesn't apply to the general rule. Why? Because price is clearly creating a continuation structure to tell us that yes, the downtrend wants to continue. And so once we identify this continuation structure, we find 3 separate touches on the top side with very nice arcs in between. And yes, these arcs are definitely important. They kind of make a sad face if you saw just now. And you guys can try this yourself. Please do. Try to backtest this for yourself. You will see what I'm talking about. When you see these structures, they're very powerful indicators of continuation. So, knowing that we are coming from a very strong higher time frame downside wave, combined with the fact that we have a lower time frame continuation structure equals more downside. That's the simplest way I can put it, right? That's how I trade. And so once I find my entry criteria here on this rejection on the shooting star, this 1 hour candle here, we enter right on the market. And as price has pushed down here, this is where I remove my risk. I just put it at break even because price should not be coming all the way back up here if the downside were to resume. So this is where we break even at this point, and price just kept going down. I didn't even have to do anything. One of those beautiful monster trades. So I hope you now understand how to break rules, right? Look for deliberate price action. That's what you need. Now, before I take you through a trade that I took on December as part of my December trade recaps, right? Gonna give you a glimpse into it. I just want to touch really quickly on the topic of instinct trading. And I know a lot of people hate talking about this because I understand that right now, the general belief out there is that you need to be a completely systematic trader in order to be consistently profitable. I hate the fact that this has become so big, right? That this has become the main belief because it is wrong. And I'm going to try to explain it in a way that's simple about why it's wrong, is that the market is not a static thing. What I mean by that, it's the market doesn't always do the same thing every single time. It likes to change its behavior over time, right? There are different market cycles depending on different macroeconomic conditions that are going on. That's the simplest way I can put it. And so if we can agree on that, then logically, that also means that a completely systematic strategy cannot work as well through all the years. It can't perform the same way, right? Obviously, some conditions will favor it more, while other conditions don't favor it as much. So there are fluctuations in its performance. The problem with these fluctuations is that sometimes they can be a lot worse than you can imagine. Some people assume that it's just going to be like, it's just going to be a little drawdown, you know, no big deal. And then it's going to come back up and I'm just going to make more profits again. But the truth is, sometimes systems blow up completely. Sometimes you don't actually come back. And I've seen that happen, and it's not a pretty sight to see. And so I think you really need to start considering the reality of the market. And so let's get into this trade recap right now. I'm going to show you how this trade was an instinct trade, how I deviated a little bit, not too much, right? Not too much, a little bit from my entry criteria. So let's get into it right now. So pound Aussie, we will be starting on the weekly chart. Very simply, the weekly chart has one purpose. It's to identify high value areas on the higher time frame. And the weekly chart is the highest high time frame we use. So this right here is our macro resistance to provide our high value area for shorts. That's it. That's all we need to see. So now we have a higher time frame bias of being bearish. Once we move to the daily chart, we also see that price is creating this evening star rejection, right? Which is essentially a large green body followed by some form of a doji candle, which in this case is a shooting star, which is the ideal form of a doji candle if we are looking to short, and then followed by a large bearish body. So this is what an evening star rejection looks like. It's not perfect. The perfect one would go all the way down here to engulf the prior green candle. But it doesn't have to be perfect for it to have some significance as a form of confluence. So once we get to the 4 hour, we identify a high quality origin impulse, which we love. In my strategy, I need high quality origin impulses to activate my continuation trades, which is what we're looking for here. So let's go into the 1 hour time frame now to look for our continuation structures. And this is what we get. So where did I deviate from my plan here? It's right here. I don't like to enter trades from green wick completions when I'm going short. The reason for that is because these green wicks often fill. So the next candle, most of the time, will fill this wick and sometimes even supersede it, which means if I enter from this candle, I will very likely get stopped out for a loss before my desired direction plays out. Obviously, that's a problem. We want to avoid that. Okay, so I did not enter on this candle. I was fully anticipating price to fill, but instead of getting that, we receive a strong H1 rejection to the downside here. This is almost never how I enter trades, but I did enter the trade right here on the market order. Why did I do this? It's because, number one, I know that I'm coming from a very strong high value area. On the weekly chart, I have macro resistance. So that's a very good foundation for shorts. Reason number two, I have a very strong origin impulse to activate my entry criteria. Number three is I have a well-developed continuation structure. And that's the final thing that I need to enter my trade. So the only thing that I'm missing here, the rule that I'm breaking, is I don't have my ideal entry criteria, which is price filling this green wick and then giving me the red rejection here. So that's the rule that I broke. And that's the reality of trading. Sometimes you will have a blemish in your trade. Not everything can be perfect. Profitable trading is all about understanding when to break rules. And the simplest way I can say it is you need to be able to stack a lot of positive confluences against a single negative, which is what we did here. And so let's go into the 15-minute just so I can refine my structure and show you how well developed this structure really is. Look at this, guys. Beautiful. 1, 1, 2, 2, 3, with a beautiful middle section in my structure here. That's just wonderful, right? We love structures like this. This is literally the ideal continuation structure in my strategy. And we also have the local highs corresponding here, which price once again missed by like a couple pips, which is not ideal too, right? So that's technically the rule that I broke, which is this green wick. I was fully anticipating price to fill, but it didn't. And so I entered the trade here. How did it play out? Beautiful, right? So once price impulsively broke down the lows here, I decided to lock in 1% profits, which is more aggressive than I usually do it, right? Usually I would leave this at break even. So why did I go defensive with my management here and start locking in 1% profits? It's because I knew that I've already broken a rule in entering the trade the way that I did. And so I don't want to compound that higher risk decision by giving even more space for price to breathe, potentially tagging me out for a break even here. So I want to be a little bit more defensive. This is how we adjust. If we're taking a higher risk decision, we want to balance that out with more defensive management. And how did this play out? Essentially, I got tagged out here for a 1% profit. And then eventually, this is what price did, completely reversing the move. The final thing I will say is that I also have a very clear technical reason for locking in 1% here, which is if price has printed such a beautiful impulsive breakdown of local lows, if this is a healthy move, price should never be coming back up into range here, right? It should never be doing that. Any healthy move would just consolidate here and then push down, leaving our stop safe. So that's also another key tip. Hope you guys enjoyed that. Hope you understand. If you have any questions, please just comment down below. I'll be very happy to answer. Got some food from home. Really been trying to clean up my eating a little bit more recently. The only flavor I have now is chili oil, but that's good enough. I love chili oil. I can eat this all day, every day. We're about to go hit a workout right now. But the gym's gonna look a little bit different than the one you're used to. Now it's time for a favorite part of my routine. Alright. We've got a few trades setting up in the yen pairs mostly. In my watch list we have pound yen, CAD yen, Kiwi yen, and Kiwi CAD. But I don't think any of them are ready just yet. The markets are off to a slow start for me this week. But that's okay, you know, it's part of the job. You get used to it over time. Before you know it, the move starts setting up and you just have to be prepared. Until then, we're on patient mode. So good, man. Where's this been all my life? Now I'm just gonna have a quick shower before we go through the opportunities for today. Hopefully I get to take a trade live with you guys. It has been some time since that's happened. So let's get into it. All right, let's get started here. We are going to begin today with pound yen. This is the pair that is most relevant. As we look on the daily chart here, we have a clear point of liquidity on the daily chart. How do we know when a point of liquidity is good? We know when the move up and down is significant. In other words, it needs to be sharp, big moves. And this has a sharp upside wave as well as a sharp downside wave. So we know that this is the level that the market really does care about, and we want to be trading from here. And so the simplest play here is to look for shorts on the lower time frame from this high value area. Okay, once we get to the 4-hour chart here, we are starting to see the market respect this level, and we are seeing the beginning of a potential downside reversal. But this is not enough. And that's the main issue that a lot of traders get into, is that they rush into trades. They see the smallest sign of a red candle and boom, they just go for it. Don't do that. Do not do that. This doesn't mean anything just yet. It can very easily reverse. And if you've been here, you know that this happens a lot. Don't rush into trades. It doesn't do anyone any good. So once we get to the 1-hour chart, we need to know what we're looking for here. That's how we make sure we don't rush into anything. And so the way we do that is identifying a very strong entry criteria, which in my strategy consists of a high quality origin impulse, which, you know, if the H1 candle closes like this, that would be really good. And then I could look at the 15-minute time frame to look for my continuation structure. Until I get my continuation structure, I don't trade anything. All right, I don't care how good the impulsive rejection is if I don't get my continuation structure, because that is my entry criteria. That's how I make sure that I have an edge in the market. So that's pound yen, keeping it very simple with some key lessons there. We have a couple other options in the yens, the first of which is CAD yen. So why do I prefer pound yen more than CAD yen, right? If we just zoom out to the weekly chart here on CAD yen, we can then clearly see that this is bouncing right from macro support. Now you can see why I'm not so keen on trading short here, because it doesn't support the long bias that we find on the weekly chart, right? That's a beautiful bullish hammer close last week from the ideal place, which is macro support, and we're already starting to see follow through this week. So this is not the ideal place to be looking for short plays. However, we do have a point of liquidity as well here on the daily chart. Not as nice as the one in pound yen. So that's yet another reason why pound yen is the superior short play to CAD yen. So this is the point of liquidity we're working with. And obviously, my entry criteria will remain the same. I'm looking for the origin impulse into my continuation structure on the lower time frames to produce my move to the downside. I will only take CAD yen if pound yen, for whatever reason, doesn't form my entry criteria, but CAD yen does. Even then, you have to know that CAD yen will be a lower quality trade. So the way that I manage the trade will be different. If I take it later, I'll show you guys. And if I don't, sometimes in next week's episode, I will recap particular trades that I took on the prior week, just so I can share some key lessons with you. So that's CAD yen. On Kiwi yen, we have yet another option, and Kiwi yen is better. Now here is some key tips, okay? Even though Kiwi yen also looks like it's reversing from macro support, it is a much more mature move than CAD yen. How do we know that? It's mature because when we measure the move from the beginning, right? So this is the beginning of the downtrend on the higher time frame, to the end, which is right here, we can see that price has almost retraced 50% of the entire downtrend on the higher time frame. So when price does this, we consider this a mature move. Why is that important? A mature move has more likelihood to reverse, even if the downside reversal is not a really significant move like that. We don't need it to be. Even if the move just goes like this, this can already be an extremely profitable move for us. Because we're trading in the lower time frames. We only use the higher time frames to get a strong directional bias, which is very important. So for that reason, Kiwi Yen is actually better than CAD Yen because we are now in a mature uptrend, which has a higher chance of reversing to the downside. So once we get to the daily, we identify a POL similar to the other yen pairs we were just talking about. And so once we get to the 4-hour here, we are dealing with pretty much the same thing. The only difference with Kiwi Yen that I don't like on the lower time frames is that we haven't really completed that POL, right? Price left a tiny gap. Does this matter? Yes, it does. In fact, it's better if price completes and supersedes our value area for a liquidity capture before it impulsively pushes down and creates our entry criteria where we enter it like so. Essentially, what we're getting here is the opposite of our ideal scenario. Not only did price not supersede the level to capture liquidity, but we never even completed that level properly. And so the lower time frame picture on Kiwi Yen is not ideal. So as you can see, both CAD Yen and Kiwi Yen has deficiencies, has blemishes that Pound Yen just doesn't. That's why Pound Yen is on the top of our list for the yen shorts. All right. Finally, we have Kiwi CAD here. This is also a very simple one. In Kiwi CAD, essentially, on the weekly chart, note how price has completed 90% of the move. And how do you know it's 90%? It's this red box here. Okay. So if price has completed 90% of the move from the top all the way to the bottom, that actually very significantly increases the chance that we find a strong correction to the upside before the overall downtrend continues to the downside to complete macro support. All right, and this is exactly what we're seeing right now on Kiwi CAD. But similar to what we just talked about in Kiwi Yen, price has completed 50% of the correction to the upside, and in fact, we have superseded that 50% mark. This means that this upside move is ready to roll over to the downside, especially if we find a value area on the higher time frames, which once we get to the daily chart, we do. This is a strong point of liquidity. We also have a reversal structure lining up perfectly with our point of liquidity. This is what we know as a reversal structure, when we have 3 clear points in an ascending channel lining up with a legitimate point of liquidity on the higher time frames. This is a good place to be looking for shorts in the lower time frames. So let's get to the lower time frames. On the H4 here, what am I looking for? This is the level to beat. If price can impulsively break this and create our continuation underneath, that will be an ideal play to the downside. This is the trade we're looking for. If we refine it deeper into the 1 hour, we need price to break this, right? That's enough. As long as the break is impulsive and we get a proper continuation structure, that is enough for us to take the trade, like so. If we don't get that, and price instead just trickles down, it's not impulsive, we have to be patient, right? Then we move to the next level to beat, which is right here. So we're simply going to wait for price to fuck around here, fuck around, as long as eventually it impulsively breaks down this level and creates our continuation here. We are happy to take this short. I've been really getting into watches lately, and the first ever piece, I'm pretty sure, that I've ever bought for myself was a Swatch, and it was last week. Overall, I actually kind of like it. It was only like 150 bucks. A nice daily piece, Doesn't look that cheap, to be honest. Wears nice, very comfortable. But then I didn't think I should get more Swatches, right? I think one is enough. Unless I'm getting one that's like, one of the collabs, you know, with Omega, for example. I think I want to get that one. But yeah, just didn't get the one that I picked out just now. I think it was too normal. No need to spend like another 200 bucks. Might as well just save it for the next watch, you know. This is the MVP, and it always has been. I know it sounds weird, but it's fucking good.
That's fucked up. Under the table, you get
What the fuck? No, not the corn, not the corn. Yeah, take the corn. And then Oreo. Oh yeah. That's that American combo right there. How's it taste, bro?
Huh? Oh, actually.
Yeah, right?
It tastes interesting.
Yeah, kan?
Let's go play snow.